Alright guys, welcome back to our channel, and today another talk with Mirko about the stock market. Obviously it can't be any better time right now, potentially at least, to start reinvesting, and we want to kind of thrive the basic technology, the basic stories of financial markets, and then come to details and to the actual current position. Mirko, isn't it now a good time to start investing as well with stock markets crashing?
Oh yes, for sure.
Okay.
Yeah, so that we have to see as a big chance, not as a crisis or as a disaster, and no fear, no runaway. So just take the situation as it is and start to invest now. This is my recommendation to everyone who starts new or even has to rebuy or whatever, it has cash on hand. Start to invest, buy the first parts of its tranches, rebuy, buy new positions, whatever. But carefully and slowly, step by step.
Yeah, let's go to the topic. You recently shared as well the difference between smart money and you called it so-called dump money. What's the difference and how they invest differently?
Correct. Yeah, dump money we call private investors, and professional investors are the smart money. So, and then you can see in the history that we have often the situation that in situations right now, the dump money run away, the private investors, and the professional ones, they buy. And this is the difference between rich and poor also, or even successful and non-successful.
Yeah, so we'll put the chart in right now, and you see the difference, right? When the guys, the smart money, Wall Street investors, hedge funds start investing, it's a different investment curve than compared to the dump money, the street smart people who might be street smart as well. Mirko, investing to start invest, how would you say, how much percentage of a portfolio does it make sense to invest right now? How would you say now is a great time?
Let's say we have 100% cash. Let's say we have no any stock shares at the moment. I would save 33%. I would invest of my cash in my case, it's up what you plan. If you plan for long-term investing until retirement, maybe for very long term, I would buy very good defensive assets or ETFs, even white diversified ETFs, or even very basic blue chips with a good dividend. Such things I would prefer at the moment.
The markets have, some say, crashed quite sharply to the downside now. Looking maybe at your portfolio and ETFs, or say like into dividend stocks, single stocks, which companies and which shares have lost the most at the current time?
In my one, I can say the financial values like BlackRock and that kind of, they are very, or banks, even hardly under pressure. Tech values, of course. Tech. I do not have too much tech. I do not have the glory sevens, but they also were very under pressure because they do a lot of money outside of US. So they're very hard affected from this tariffs topic process. So I would say a good balance in the portfolio is most important.
Okay, now you said 30-something%. If you start to invest, you would start to invest
30
right
to
now.
40. Yeah.
30 to 40%. What's the idea then, according to your analysis, when to start investing next?
It could be that we see a recession. Nobody knows it. I still 50-50 roughly. I do not know it. Nobody knows it. So if it comes, I guess we see another 10 or more % down drawdown.
Okay.
So for that, we have another tranche of a second one to invest. As soon we see another 10% drawdown, and then we have still at least 30 or 25% left for the totally disaster, if a totally sold out will come afterwards.
Okay.
This I do. It could be that we after that we have this left, but this never pays as much as when the money is completely gone, when you invest all in one move. Yeah. So this is a for the psycho, a very, very good thing to invest in 3 parts maybe.
Volatility index.
Especially in times right now.
Yes, the volatility index, the VIX, has been coming slightly lower again following this week, yesterday, right? So peaking higher again, and now you can see that on the charts as well, guys, and now coming slightly back to lower levels. Is that an indication you look for as well?
I think so. Yeah, I think we see a bounce now, upwards, an upward bounce. Maybe it can run in the S&P, the 5,300, maybe 5,400, nobody knows. And then is the decision there, is it another drawdown coming, or we see a bottom and from there we can restart up? Nobody knows. So this is why I recommend to share it in 3 parts.
Okay. You also talked about briefly recently the fear and greed index. Can you walk us through the fear and greed index and how to use it?
Yeah, it shows the sentiment in the market. So from all investors, not important smart or dumb or whatever, from all of them. And we never saw such deep signals from there. So we have a fear and greed index. It's 4, I think, today from 100. So there's a big fear in the market. So this is what we mentioned with the dump money. They run away. They are very worried. They sell out their portfolios, and this is the big chance if you swim against the storm. Exactly.
So basically, if the market currently is extreme fear, one might say it might have found a bottom for the time being because the market is already quite negative.
Exactly. So a bounce will come. The question is, do we already saw the deepest point or not? That's the big question, which nobody can answer this question yet.
So now we talked about like how much maybe to invest in a portfolio. Say you start from scratch, 30, 40%. Any particular industries you would say, hey, they are maybe bulletproof, crisis-proof, you would look in?
Yes, I would cyclist values, assets I would avoid at the moment, because if we really see a recession, they will significantly draw down like oil or other like Rio Tinto or whatever, that kind of assets carefully, because if in case of a recession, they will then, if really we see another drawdown of 20%, then these are the values which I would buy. But for them, it's maybe too early yet. But anti-cyclist values, like the normal thing, what we daily use, like a Procter & Gamble, McDonald's, whatever, they are stable and they are always needed. So I would prefer this kind of stuff. Or even wide certificated, diversificated ETF.
Yeah, my next question,
This
ETFs.
is correct. Like a MSCI World at the moment, which has a very high US part inside, 70% or even more. So that one, it came back significantly. So I would here, if I would invest for long term, I would here rebuy, definitely.
Looking at the crypto world, I know that's not your playing field, but cryptos have, say, talking about Bitcoin, have stabilized at kind of interesting levels. Do you follow a little bit what's going on?
I follow up the Bitcoin, and I'm surprised that he did it quite well. He was not drawn down too much. So I think, yes, maybe they also, this is a little bit depending on the NASDAQ also. I think Bitcoin and NASDAQ running parallel nearly. So I would say it's the same what I mentioned before. If we see another drawdown, we see it in Bitcoin also. I guess so. But it could be already the bottom that maybe Bitcoin is, I would do the same. 30% of that, what I would like to invest, I would put in now. I would keep something on stock to have later on a chance to rebuy again in a deeper level, maybe, hopefully.
Keep some powder dry, probably.
Keep some powder dry.
Exactly. So when do you see that maybe a recession is coming or not? What's the figures? What's the numbers you look for? Say like, okay, now we are out of the most.
Thank you. Honestly, at the moment, we do not see too much signs of a recession, in my opinion. So I am still not sure if it will really come. So I would say, like when we see the job market in US, unemployment rate, there is no any abnormal movements or something. It's just normal. 4% is very normal. The inflation we will see this week, we get inflation data, I think, in US. Is there any sign of that? But at the moment, we cannot say that it looks like a recession. No, that's just a feeling now, because we have this drawdown because of a short political decisions. But so I'm really not sure that we see a recession at the moment, and I see no signs for that at the moment. But this can change very quickly.
Yeah, guys. By the way, if you want to follow up with day-to-day content. Just don't miss to check out our channel on a weekly basis, because here under this link we focus and follow up obviously with the weekly market insights as well, in terms of getting you kind of real data up to the table. Mirko, that's the interesting part you mentioned right now, but looking further down the drain, like no recession, potentially the tariff story seems to be maybe only the trigger. I might say it's only the trigger because the markets were already kind of tipping over, stock markets. What's the point in terms of the tariffs or US policies you might see could influence the stock market more?
It's up what they do now. If they find deals with the big important countries, we see a draw up immediately. I guess so. But if this needs long time and nothing happen and argue here, China, US, and so on, then I could be that we see another drawdown in the markets, definitely.
Okay.
That has potential that we get another 10% from that, but this means still not that we get a recession. Anytime they will find a solution for that case. This will not forever open. So we say political markets have short legs. So I believe also in that case that it will find a, but nobody knows where is the end of that, or when is the end. It needs several weeks, or is maybe tomorrow already finished. Who knows?
Is that the time when you would?
But that's a good play. It's really a good time to buy now, because this is not this drawdown is not because of economic or because of policy of anything for long term. It is just a political decision based on.
Yeah. Is that then the time where you would look into these so-called cyclical stocks, maybe like some technology stocks from US or European suppliers, Rio Tinto, BHP Billiton, you mentioned any of those?
The technology, I would wait a bit until this market finds his bottom, let's say. That is too early now. We don't know what happened tomorrow at the moment. Every day another news, every day another thing. So I would wait until it's a little bit more quiet, and then I would check what I want to have in my portfolio, and then I would start to pick the diamonds, let's say.
Yeah, makes sense. Guys, we hope we gave you some ideas on how to navigate the current situation. Obviously, with Mirko's long experience, he bought his first shares in 1997, if I'm not wrong, and he has been a long time investing in Asian as well as European or American markets in general. He lives in Asia, similar to me. And guys, leave your comments below the video. Don't forget to subscribe to our channel as well. If you have any questions, just don't hesitate to also message me. And please don't forget to check out our website, fxstrategies.asia. See you then. Take care. Thank you.
Thank you.